Kramer. Welcome to Mad Money. Welcome to Mad America. Other people want to make friends. Remember that? I just want to make you money. Money. For the past 8 years, my job has and continues to be not just to entertain you, but to educate you. So in this fabulous 8th anniversary of Mad Money, I want you to continue to call me at 1-800-743-CNBC. Welcome to the 8th anniversary edition of Mad Money. Not a great day for an anniversary, given that the market finally broke its Dow winning streak. Oh, I love that streak. I'll be unabashed about it. Dow sinking 0.25, 25 points. S&P falling 0.16%. NASDAQ declining 0.30%. 8 years ago, I realized that regular people like you, regular people who play this game, needed help. That you needed guidance from someone impartial, who wasn't after your fees, didn't want your commissions. In short, you needed an investing coach. I've been trying to fill that role every night, 5 nights a week ever since. So tonight, to mark the show's fantastic 8th anniversary, we're going to do the exact same thing we always do. Help you try to make some money the best way we know how. So let's get into it. Let's start with the game plan. We got a smattering of earnings coming out, but before we get to that, let's focus on the event that will control the market next week. There's not too much to this, because Wednesday there's a Federal Reserve meeting. I'm going to be blunt. From now on, we are on FBFH. Watch. What's that? Come on, haven't you been watching anything around here? FBFH is the Fed bolt from hell. That's my new term to describe how so many people are solely focused on when the Federal Reserve is first going to stop buying the $80 billion in U.S. bonds that accumulates every single month to keep your interest rates low, your mortgage low. And then when is the Fed going to start selling those bonds to unwind its gambit to boost employment, housing, and the stock market? So many prognosticators think that in one of these meetings, maybe this one, Bernanke will signal that things have, I hope would have gotten better. And that's code. That's code for the great unwind is upon us. That the Fed bolt from hell is unleashed from on high in Mount Olympus. And nobody ever made a dime getting hit by lightning. So if we sell off in anticipation of Wednesday's meeting, you know that it's just the fear or the FBFH at work, okay? Repeat after me. When the Fed starts selling its bonds, that's the end of the world. I mean, isn't that what people say? Except for fuddy-duddy old me. All right. Now, back to our regularly scheduled game plan where we're not in fear of Fed, we're actually trying to make some money or save money. You know I like tech here. It's the part of the stock market that's still cheap on a historical basis, and my charitable trust, you follow along actionownersplus.com, has been buying a bunch of tech stocks, old line tech. But there's one sector of tech I want you to avoid like the plague. It's the personal computer sector. I think it's being challenged by smartphones. You saw that new Samsung announcement. Tablets. Competition's cutthroat beyond all belief. That segment of the industry is in what we call secular decline. I mean, it doesn't matter how strong the economy is, it's still going lower. With that in mind, I think you should take action on Monday morning. I want you to sell Dell. You own Dell, it goes, okay? It is now on the single biggest sell list I've ever had. Right now, Michael Dell is trying to take the company private for a little less than where the stock is currently trading. I sat wrapped this morning on Squawk on the Street, sitting next to David Faber. When he detailed the shocking decline, I mean, I was like in the middle of, you know when we're on TV and a guy's saying stuff and you finally say, geez, really? He was telling me the shocking decline in cash flow Dell's experienced in the time since this deal started percolating. To put it simply, Dell's doing terribly. I'm confident that this stock would go to $8 and change. Hear that? Where it was shortly before the deal was announced. You cannot be in Dell, people. It is dangerous now. And I believe you must ring the register first thing Monday morning. Yes, it is dangerous, and you have to sell Dell. Hey, dude, get out of Dell. Tuesday, we get February housing starts. Right now, the bulls are saying that we could build as many as 1 million homes this year. I think because of the inventory shortage, we could need as many as 1.2 million homes. Now, make no mistake. Housing and oil and gas are the two big drivers of this economy, and I think we will be pleasantly surprised when we get this housing starts number. Of course, the Fed bolt from hell crowd will ratchet up their bets that lightning will strike on Wednesday if they see a strong number. And I think they will be, unfortunately, unpleasantly surprised when they see it, because nobody in that crowd wants to see anything good. I actually like things that are good. Old-fashioned. Housing so strong that it's lifting all boats, including Brunswick, by the way, and the housewares. So let's listen to Williams-Sonoma conference call on their earnings on Tuesday to be sure the carryover's intact. Now, I'm thinking this WSM, it may belong in our ever-expanding Great Gatsby Index of luxury brands. And maybe it's the Greater Gatsby Index. Now, I say this because, look, I once bought a pot there for something like $200. It was like Crusolet or Crusolette. It was a big, round, cast iron red thingy. And then I saw it at the Jersey Shore outlet for almost half the price, and I am still kicking myself. 8th anniversary. Nothing's changed. Anyway, now, we use a ton of gauges to measure things like retail sales and employment around here that are bottoms up, meaning that we look at what individual companies are telling us. How about the nation's largest uniform company, Cintas? It reports on Tuesday. And if Cintas says sales are strong, that's a good precursor for next month's employment number. I will follow up with the information when I hear the call. Don't want you to buy the stock. It's had too big a move. I know nothing will come close to the importance of the all-important on-the-heels Fed meeting. On the heels. What is on the... I have heels. Nothing's ever on them. These Rockports. I got $59 at that Jersey Shore outlet. 2 for $100. Anyway, but on Wednesday, we're going to get a report from the best barometer of international trade I know, and that is FedEx. The company always gives you a worldwide outlook, and that's, you know why? Its CEO happens to be Fred Smith. He's a trained economist, so he gives you a very rigorous and perhaps sobering global update. You want cheap tech? I think I got to go with J-Bill. They report. That's the parts assembler that I believe is about to start regaining its old growth path. This used to be a high-flying tech when tech was in vogue. Give it another quarter. This one might be affected by lumpy Apple orders, and I bet it returns to greatness after this one. Thursday, we get a Gatsby play reporting that acts terribly. Lululemon. Hey, listen, yoga's not a craze. I think Lululemon can be the Nike for women's clothes. But I also know that it's highly valued, and right now retail is choppy. So let's be cautious ahead of this Gatsby name. As cautious as I am about Nike, which also reports Thursday. Let's take passes on both, okay? However, I'm going to stick my neck out and say that I think that Ross Stores seems to be at the right spot. It is hard to keep a good retailer down, and Ross reports on Thursday, and it might be a smart place to go if you're looking for a post-Fed meeting play, meaning if the Fed causes the market to go down, maybe you circle into Ross between 2:30 and 4. On Friday, we got two reports from companies with stocks that have been defying gravity, Darden and Tiffany. These two are failing upwards. Darden missed the last 2 quarters estimates with disappointing numbers from both Olive Garden and Red Lobster, yet its stock has been on a tear. Tiffany's missed 3 quarters in a row, and yet it's roaring. Perhaps because we just learned that Qatar, which is Qatar, or QATAR, Investment Authority, a 10% owner, just bought 823,000 shares, and this is pretty thinly traded stock. I would not chase this Great Gatsby Index member up at these levels. However, if it gets hammered on the report, if they come after Tiffany, this diamond and silver company stock is coated with Teflon. So I would do some buying. It's not Teflon. It's not Tiffany so much as Teflon-y. Here's the bottom line. We got some important earnings reports next week, including Nike, FedEx, Lululemon. But this coming week is all about the fear of the Fed bolt from hell. So understand that Wednesday's Fed meeting is literally, like it or not, the only real event that matters. Why don't we take some phone calls? 8th anniversary, we still take phone calls. Jim in Florida. Jim.
How about a big 8th year of booyah?
Huh?
Okay. How about a nice booyah for our new Pope?
Yes! Yes! Argentine! How thrilling is that? Huh? I was thrilled about that. That'll be great. What's up?
BlackBerry, BBLY.
Yeah.
It looks like they have good sales generated. I hear of a big $1 million sale and stuff, and they've got good foreign interest. Is it a good time to buy right now?
No, look, this stock trades 12:15, 12:15, 12:15, 12. It's like 12:15. It's like 15 minutes after noon. And so I want to wait till it gets back to 12, and then you can trade it again. Right now, I fear that you may be behind the 8 ball if you buy BlackBerry. Another year older and wiser. Lots of earnings out from big companies next week, but the most important, it's the Wednesday Fed meeting. It could actually be the only thing that matters. Our 8th anniversary celebration is just getting started. I'm excited about this. All night we're highlighting memorable moments since the show began. And remember, your opinion counts. You voted online for your favorite moment. And we'll reveal the viewer's choice at the end of the show. As we go to break, that's technical term for commercial. I want to rewind to a moment I'll never forget, which proved that panic is not a strategy.
We've now broken Dow 10,000. As you can, we're down nearly 900. P&G is now down 25%.
Oh, well, if that's true. If that stock is there, you just go and buy it. That can't be there. That is not a real price.
Is there a hedge fund that is liquidating? Is there a distress seller?
Something else? 49.25 bid for 50,000 Procter if I were at my hedge fund. Procter just jumped 7 points. I said I liked it at 49. I buy 50,000 at 49. I now flip it at 59. I just paid 500 G's. The market didn't work. It broke down. The machines broke down. It's the greatest story never told. You'll never know what happened there.
Coming up, sailing.
Jim Cramer. Jim Cramer.
Jim Cramer. The very unstable Jim Cramer. In the world of cable news famous, Jim Cramer is seriously famous.
This fiery money manager literally rolls up his sleeves to host CNBC's Mad Money.
With Cramer?
Jim Cramer.
He is evidently insane.
You have to be nuts to understand the market.
Yeah.
And I am nuts about the market.
Listed development.
Losing Jack is a triple sell. Don't buy!
Don't buy!
I'm grounded and spend all day listening to my dad yell at Mad Money with Jim Cramer.
Everything's gonna be fine.
Stark Industries. That's a weapons company that doesn't make weapons.
When I have a kid, I'm going to set him in front of the TV, make him watch Mad Money all day long.
Are you okay?
Oh, yeah, it's nothing. I was a guest on Mad Money last night. What's happening? Is one of you Jim Cramer? Okay, stop it.
Hello, fellow Facebookers. I'm here to do one thing. Get you more friends.
There is one guy I like. He gives it to you straight.
It's Mad Money with Guillermo.
Let's take a call.
What's up with the stock market?
I don't know. What's up with your face?
Can that be Jim Cramer from CNBC's Mad Money?
I have brought in a financial heavy hitter.
Please welcome Jim Cramer.
I'm stupid, and I don't have the money.
Don't say that. It's very hard.
They're stupid.
Is it?
Yes.
Yeah. Mad Money's Jim Cramer.
Jim Cramer!
And then you get mad. And then you get mad.
Mr. Cramer, are you the TV personality who regularly shouts and badgers on Mad Money?
Well, I think Badger's debatable. But yes, I have a very, dare I say, flamboyant personality.
I'm going to get you aboard with some sound effects. You can try hitting some buttons like this.
You have beautiful eyes.
The president wasn't as fevered this morning as Jim Cramer.
I've never seen the president that fevered.
We're joined now by CNBC's Jim Cramer and former chairman of the Federal Reserve, Alan Greenspan.
Every day I say, I can't believe I got my own show. Very lucky guy. As our 8th anniversary celebration continues.
For investors, what is your advice today?
Okay, whatever money you may need for the next 5 years, please take it out of the stock market right now, this week. I do not believe that you should risk those assets in the stock market.
Even if you would take a tremendous loss and selling your stocks at this decline, you say take it out?
I don't care. I do not care where stocks have been. I do not care where stocks have been. I care where they're going. And I don't want people to get hurt in this market.
Coming up, ridiculous returns.
This is going to be the most important, most useful class you'll ever take
We love Mad Money.
Get fired up! Get fired up! Welcome to Mad Money 101! The one class that could make you some serious cash. Now, the United States has a new frontier, the oil fields of North Dakota. Mad Money is boots on the ground in the Badlands to show you how homegrown innovation and technology have opened up one of our biggest oil discoveries.
11,000 people we're going to hire in North America this year.
This is all about America.
And now, great moments in Mad Money history.
The price of oil here in the U.S. has actually been in free fall. It's mosquitoes. It's been bothering me the whole show. Anyway, but in this case, I got them.
Great moments in Mad Money history.
Well, let me give you a flavor for what's going on. Here's some of my buddies that I brought from the university. Take it easy. Go teach him a lesson. I own a couple of Longhorns. I know the drill.
The lightning round.
Welcome to the heart of American manufacturing. Coming to you from the Ford F-150 plant in Dearborn, Michigan. Who says we don't make anything anymore? We got to talk to the man himself, Al Mulally, Ford CEO. Mr. Mulally, it is a privilege and a pleasure to be here. Another memorable Mad right here on the Mad Money set. After the wild market we've been having, I'm prescribing some family therapy.
I do have a question for you for the future. I've been thinking about this for a while, and I was wondering. Will you marry me?
Congratulations, it's graduation. Really? Wow! Welcome back to Mad Money. Now the moment you've been waiting for, Viewer's Choice, voted by you as the most memorable since the show began. Bernanke needs to open the discount window. That's how bad things are out there. He has no idea.
Kramer.
I have talked to the heads of almost every single one of these firms in the last 72 hours, and he has no idea what it's like out there. None! And Bill Poole has no idea what it's like out there. My people have been in this game for 25 years, and they are losing their jobs, and these firms are going to go out of business, and he's nuts! They're nuts! They know nothing! First, let me use this moment to thank you, the viewers, and to thank CNBC, the network, for giving me this amazing platform to help inform you, and in that case, the Federal Reserve, about what was really happening behind the scenes, what's really driving everything from the stock market to economics, and yes, to the Fed. We do have two important takeaways from the they know nothing rant, one negative and one positive. First, the negative. The Fed more than completely disregarded my comments that fateful Friday. We know from the just published transcript of the Fed meeting, after I said they know nothing, that I was the butt of laughter for my passion and my insistence that the Fed was clueless in its ignorance about how firms are going to go out of business and thousands of people are going to lose their jobs. The transcript says laughter after someone at the confab mentioned my attempts to get them to cut interest rates fast to forestall a crash. I know, he who laughs last has laughs hardest. But so what? I failed to wake them from their complacency, so I didn't do my job. But the more positive takeaway is that I resonated with you, the viewers. I got many of you out of stocks, or at least cut you back in your holdings by sounding the alarm before the financial crisis crushed the market. I am proud of that. My passion got through to you. And may I again thank our fabulous network for sticking by me in a moment that many regarded as erratic, raise eyebrows, at the time. Now, it's a sin to be too reverential to yourself. But I do want to be reverential to the staff of Mad Money, the hardest working people in show business, led by our incredibly fabulous executive producer, Regina Gilgan. and our amazing head writer, and yes, only writer, my longtime collaborator, Cliff Mason. I'm indebted to everyone from the network to the staff to, most importantly, you for giving me the opportunity for 8 great years. And here's to hoping for 8 more. Stick with Kramer. Certainly have a lot to be thankful for our 8th anniversary. I want to thank Mark Hoffman, the terrific president and CEO of CNBC, who believed in me and said that this show could succeed. Thank you, Mark. Nick Diogan, our amazing editor-in-chief, who likes the show very much. Again, to Regina and all these fabulous people I wish you could see on the floor because they're so great. And I want to thank you for sticking with me. I always feel every single day when I come to work that this is the most exciting thing that has ever happened in my life. And I just got to tell you that you still keep coming up to me. You still say booyah, and I am thrilled. People say, is it over? It's just beginning. I like to say, there's always more. So I promise to find it just for you. Ready, Mad Money? I'm Jim Kramer, and I will see you Monday.